In my subjective opinion, indicators are somewhat overrated in the field of forex trading. Less experienced traders often allocate them superficial power, which many do not deserve. Such traders think that being able to read into certain exotic indicators will somehow enable them to instantly become profitable. Well, life is usually not that easy. Indicators are based on mathematical formulas, but their usefulness is mostly based on psychology. In other words, the more that people use them, the more valid they are. More exotic indicators are used by a small number of traders, so their impact is not as significant. The truth is, there are many exotic indicators that will often confuse traders, especially if combined with other indicators. The average usefulness of an indicator has a probability of between 50 and 75%, which means that using some indicators to predict a move is no better than tossing a coin. If they were so good, earning money on the forex market would be easy for everyone. As stated, having more information adds to the confusion and indecision. As a practical example, let's say you are using an ABC indicator, which suggests that the price will go up. Meanwhile, the majority of traders are using another indicator, which suggests the price will go down. So, if you enter your position based on your indicator's mathematical readings, you will lose money. As we already highlighted, psychology is an important part of this business. The best approach would be to use a few simple indicators that are massively in use. This will ensure that majority of traders who use them apply the same reading as you. The simpler the situation is, the more that traders can spot and act upon it. As a consequence, you and other traders may enter a position in the same direction, building a favorable market condition that is a self-fulfilling prophecy. Remember, trading is not about showing others that you are the smartest guy around. Yet, this trait is evident on many trading forums, where members try to outsmart each other by claiming to use more exotic indicators. The best and mostly used indicators are price and trend line. Other indicators worth considering are moving average, which will not give you an exact entry point, but may hint at the possible direction of a trend. The simpler indicator, the better. If a trend is going upwards, with the moving average indicator also showing an upwards move, it would be counterintuitive to sell a particular currency. You should buy instead. This sounds simple, and it is simple. In the trading business, try not to outsmart others. Just follow clear signs on a chart. Remember, there are no heroes in this business, just humble followers. Followers make money, while heroes with a strong ego sometimes blow billions of other people's money. If the situation is not clear, stay out. There will be other opportunities with a greater risk-reward ratio than the present one. Discipline and patience are your best friends in the trading business, while watching from the sidelines and doing nothing are important parts of any valid trading tactics. That said, we should mention other popular indicators besides trend and channel lines, which are also important. You may give them a try and see if you can use any of them, although I would not give them too much importance. Such indicators include two exponential moving average crossings. People often ask about which default numbers are best when using these indicators. The answer is simple. Whatever looks good and meaningful on a chart is valid, given that different trading time frames require different numbers. If you trade for the short term, try to experiment with numbers and see if a certain combination offers you any clues on the chart. Some indicators that may be worth considering are the Relative Strength Index MACD 12.26.6 and Fast Stochastics 14.3. Fibonacci is another indicator used by many traders, which posits that the price will often retrace 33, 50 or 66% on its way up and vice versa on the way down. I must admit that most of the time I don't use any of them except for trend and channel lines, while I sometimes use a moving average to easily spot an overall direction. Indeed, price charts and trend lines are all indicators you will need. People often forget that trading is a probability game, not a game where winners read indicators better than others.